Welcome to the Wealthi podcast, where we interview property professionals to help you learn how to invest in real estate in all the best ways. I hope you enjoy the show. Welcome everybody to another Wealthi podcast. And today we are very lucky because we've got the wonderful Chris Hynes from London. He is heading up our European Wealthi office. And this podcast is especially important for any of you out there that have been thinking or dreaming about one day buying property overseas. I know as a young guy, I always wanted to buy real estate in London and Italy and Portugal, and this has been one of my life's ambitions. So it's been awesome to be working with Chris because now we've got a man on the ground, and for the past 6 months, he's been researching the top markets around the UK. And he has a long history of dealing with different properties, international properties in Portugal. His father's a developer. His family works all over Europe, and he has been an estate agent over there for quite a while. So we're blessed to have Chris on the team working for us over there and to have him on the show today. Chris, thank you for joining us. I know that it's late over there.
Yeah, no, what an intro. Thank you, Dom. It's great to be here. I'm really looking forward to having a chat to you today and hopefully educating some people in Australia about the UK market and what's been happening over here over the last sort of 12 to 24 months, you could say. But yeah, thank you once again, and thanks for having me on the show. It's great to be here.
Yeah, look, it's very exciting for me because you and I talk very regularly. We're always talking about the different sites, the different areas, the infrastructure that's going in, the different investments in infrastructure, and how the UK is changing. I mean, people kind of think about the UK, they think of Brexit, they think of London. And outside of London, it's hard for them to really conceptualize many other markets. But they often think, well, London, very, very expensive, and they are correct. And that's what's led you and I, especially you, to go and look for other opportunities to apply the Wealthi methodology for research to the other markets around the UK. But before we jump into those markets, can I ask you, how is the UK performing? What have you seen in London, the UK generally?
Certainly. So as we all know, London is a strong market. It's almost its own country in a sense when you look at the UK, and it's always going to perform extremely well. I think they're now saying that, you're almost ensuring that your property is going to double in value in about 8.7 years is what they're saying now. So it's a strong market, and you're going to see some sustained growth in that London market, no doubt. And we're starting to see that ripple effect out from London. People, I guess COVID has definitely sped up the situation, but people now want that space. They don't want to be crammed up in their little 2-bedroom flat or 3-bedroom flat, whatever it may be, in London with no outdoor space, not having a balcony, not being able to go for walks in the countryside. So I think COVID's accelerated the way in which people in London have taken their perspective on living, and now they're looking for more space. So we're seeing that rippling effect out of London, and it's really helping places down south. You could say in the likes of Surrey, for example, property prices have started to, over the last 12 months, have really accelerated quite astronomically. And then the same goes for Kent. People looking for those commuter belt locations where they can get into London quite accessibly. And then when we look to the north of London, so this starts to include Birmingham, and we've spoken about Birmingham a lot in the past, and it's a very, very strong market now. It's now deemed the UK's second largest economy, and it's a powerhouse in itself. So we're seeing some very strong price growth in Birmingham now, and I think there's a number of contributing factors that tie into that, but a big thing being infrastructure projects that are going into Birmingham. And as we've seen, we've got the HS2, the high-speed rail line that's connecting London to Birmingham in about 45 to 50 minutes, give or take. So that's really going to help its position as a commuter city outside of London, where you can get into an affordable, brand new 2 or 3 bedroom apartment, for example, and you're looking at around that 250 to 300k mark. And you compare that to London, and you look at a 2-bedroom in London, and I think you're looking at close to that 600 to 700,000 pound mark. So from a price point perspective, from an affordability perspective, and the standard of living, Birmingham's really cemented itself as a commuter city to London. And then when you look further north from Birmingham, I think the Manchester and Liverpool over the last 12 months have performed extremely well. Liverpool saw price growth of 10.5% in the last 12 months year to date. So that's performed very, very well. Manchester is following close in suit. That's at about 8.7%. year to date in terms of price increase. So they're both performing extremely well in themselves, and they're creating almost you could say almost a London outside of London. They've got the sports, they've got the venues, they've got Manchester United, Manchester City, Old Trafford Cricket Club. So they've got the international recognition now due to their sporting accolades. But then you're also seeing large creative businesses, or any business really, corporate businesses relocating their headquarters up to Manchester. And we saw this with Birmingham. We saw the likes of PwC, KPMG, Goldman Sachs, Deutsche Bank's another one, move up to Birmingham when the HS2 line was finalized. Because from a business perspective, if they can relocate all their staff up to Birmingham and it's a more affordable place to live, and then rents from a commercial perspective are much more affordable as well, it makes sense from that business standpoint. But we've seen some very, very strong price growth over the last 12 months, despite everything that has gone on with COVID, as bad as it's been over here. But we've come through the other end, and the UK as a whole is up about 6.5% in terms of price growth for the year as well. So it has performed well. It's been a strong market. The UK, I think, is quite fortunate in its I guess international recognition now, and it always has had that international recognition, but it holds a very strong economy. And I think that we're quite fortunate that we've got through this COVID situation relatively unscathed from a property perspective. And I think there's some big things on the horizon for the next 12 months now, as we slowly dwindle out of these COVID times and into the new era, as some might call it. But it's been good.
So you can tell that you're bursting at the seams with energy. There's so many markets that you mentioned there, and we could probably spend an hour on each of them.
Definitely.
So for any of you out there that are watching this, listening, pay attention, and you are interested in going deeper, Chris has his own series where he jumps into each of these markets, where he's talking about Birmingham, Manchester, Liverpool, Newcastle, Surrey, some of these markets, and you can dive in, listen to his presentations, and he gives you a deep and thorough understanding of why these cities are starting to really blossom. Now, some of the things that I've been learning, listening to you and watching you, is it sounds like since Brexit, the UK and I suppose London and the UK have realized that they were over-reliant upon London, and they wanted to start to invest in other cities around the UK to make them their own economic powerhouses. And that's where this HS2 has come into play. So for all of you that heard Chris say that, essentially what the UK has been doing is bringing out a new high-speed rail to connect many of the cities that are in the north. Now, that really excites me. So currently, what's it take to get to Birmingham? Is it like an hour and a half or something?
Yeah,
or?
At the moment, it's about an hour and a half to 2 hours, depending on which train you get on. But yeah, about an hour and a half to 2 hours at the moment.
And then the HS2, the high-speed rail, is coming in. And when does that complete?
That'll be completed towards the end of 2026 at this rate, given no more delays. Fingers crossed there's no more. But yeah, 2026 at this date.
So as an investor, really, we see this as an opportunity, because suddenly by 2026 or 2027, if there are some delays, people living in Birmingham now have the opportunity to commute into London in 45, 50 minutes, which is just a normal commuter time.
Exactly. It's what my other half takes to get to the hospital in the morning, for example. It's a 45-minute commute door to door. So I think it's really going to open up the opportunity of commuters living or working in London and living in Birmingham. And you're going to be dropped straight at Euston Station in central London. You can get straight on the tube from there and be at your door or be at your office in 10, 15 minutes from there. So you're really probably looking just under an hour door to door if you're living within close proximity to the station in Birmingham. But it's a fantastic opportunity. I think that the power of HS2 for the whole of England, and if the plans go ahead and keep pushing up through the north of England and push up to Manchester, push up to Leeds, unfortunately, from what we've seen in the news today, the plans to Leeds, have been scrapped. So they're at the moment, the plan, if it stays as it is as of today, will be going up to Liverpool, and from Liverpool they're going to decide later on down the track what to do with the extension of the line. But it's as you've mentioned, getting into Birmingham now before 2026, you're definitely capitalizing on some very strong price growth to come once that line is completed. And the same goes for Manchester and Liverpool. If you can manage to capitalize on the opportunity that lies there at the moment. And yes, that's drawn out a little bit further. It's 2033-ish is when they're saying you'll have completion up to Manchester and Liverpool. But nonetheless, that gives you about 12 years now of price growth if you were to buy something this year. And once we do see the line finally completed up to those cities, I think we're going to see, it'll be interesting to see how prices do respond, but I think we're going to see some very strong price growth off the back of that, no doubt.
Well, that's the game, right? I mean, everybody wants to make a dollar today, but when you buy a real estate, it's, you keep on making dollars forever. And, when you're looking at it with a 10, 15, 20-year timeline, then that's the real benefit, right? And, when we think in, we've got to think about dollars, conversions, dollars, Aussie dollars to the pound. We've got to think about how to actually buy these assets and what's the practicality behind it all. But before we dive into that, there's one thing that I want to say. I spoke to a very intelligent investor, Adam Gahar. He runs a business called EG Funds. Now, EG Funds has more than $4 billion under management. And when he was on the podcast, he said something very interesting to me. His father grew up in, I think it was Lebanon. And at that time, there was some kind of civil war and there's some issues there. And all of his assets were basically in real estate and things within Lebanon. And suddenly he saw all of his money evaporate like that. And his learning from that experience was that he never wanted to have all of his eggs in one basket. He always wanted to have some of his investments in international markets so that if something were to happen one day, there's always that other avenue for wealth. So as an Australian, I found that very exciting. I mean, obviously, Australia is a very different market to the Middle East, but I do see a lot of value in having some assets, in other countries. Now, one thing that you said there is, Birmingham prices are sort of £200,000 to £300,000. So that's what, 400,000 to 500,000 Aussie, roughly.
About that, yep.
And from what I understand, it sounds like you need a 20 to 30% deposit to really get going. Is that right? To go and buy these properties?
Exactly. So how it'll work is you'll pay very similar to Australia, you pay your reservation fee. And that's generally from about £2,000 to about £5,000. So if we put that in dollars, looking at about, let's say just about $4,000 to about $10,000. Now, once you've paid that and that's all sorted and contracts getting reviewed and we're in that process, once we've executed those contracts, we're then asked to pay the remaining or the 25% deposit. In most cases, it is a 25% deposit. And the reason they do that is because you can generally go to your bank and ask them for a 75% buy-to-let mortgage. So you'll be paying all that cash to the developer upfront, you sit and wait, and then once it's completed, that 70, or you'll knock on the bank's door again and you'll ask for that 75%, which will then cover the remaining amount of that property price. So that, I guess, to put it simply, yes, you'd be looking at about 20 to 25%. Most cases, you're looking at 25%, as it just sits in the middle and it's easier for both parties, really.
And Chris, is it difficult for a foreigner to go and get a loan and to purchase over there? Are there different or additional taxes on the way through?
No, they're quite, willing in the UK. They understand there's not enough houses in the UK at the moment, so they're almost encouraging property investment and one non-residents of the UK to be purchasing property in the UK as well. So there's no additional stamp duty rates that get added on. There's no additional capital gains tax rates that get chucked on top as well from an expat or from an Australian purchasing in Australia as well. So it makes it a very easy process for someone living overseas that might want to dabble in some international real estate, like you said, diversify that portfolio and buy some property in the UK. And a very straightforward and easy process, very similar to, or the exact same as what it would be for myself buying in the UK now. So it's,
So one thing that I was particularly excited about is some of the emerging markets. Now, obviously, when we're thinking about, let's just say that the places in Birmingham, and it's going to cost us, say, 400,000 or 500,000 Australian dollars. And we have to come up, let's just say, stump up a 30% deposit. That's, nearly $150,000, right? Maybe a bit less, say 120 to 150,000. That's still a lot of cash. Now, some of these other emerging markets that you've been looking at, Newcastle, Liverpool, we can go and access investments that are far less than, the £200,000-300,000. We're looking at what, 80, 90, 120, maybe 150,000 pounds?
Yeah, around that. So Bolton's a great example, and this is another emerging market, but there's one in Bolton at the moment that they have one bedrooms going for about £100,000. So what's that, about 180, 190,000 Aussie dollars at the moment. So that's the same. It is a 25% deposit for that. So you're still, you're looking at about under 50K for that 25%, or about 50K, you could say, as that 25%. So that's an emerging market. Bolton is just outside of the likes of Liverpool and Manchester, kind of sits in the rings outside of both of those cities, in between them in a sense. And that's experiencing that ripple effect outside, or from Liverpool and from Manchester, as they continue to grow. And once again, capitalizing on one of those, as you said, really the emerging markets. And from a price point perspective, you're still getting the same quality. It's still the same developers. It's just a more affordable entry point, and something that's helping first-time investors get onto the property ladder, really, and also people looking to, like you're saying, diversify your portfolio. It's a more affordable option for people that don't have 150K, 200K sitting in the bank account, because that is a lot of money that not many people have sitting in their bank.
And the other thing that I was I was probably giving Charlotte a bit of anxiety, because I want to go into this market and buy some stuff, is what really attracted me is, one, the price point. Two, it was the rental yields. Like, what kind of rental yields are you experiencing over there with some of these investments? Just a standard 1 or 2 bedroom, apartment or flat, as you guys call them.
So if you were looking at, we'll mention Birmingham, Manchester and Liverpool quickly first. And as they're stronger markets and have performed quite well over the last 3 or 4 years now, rental yields have come down a little bit. 3 years ago, you might be able to achieve a 6.5% rental yield. You're now looking more so around that 5 to 5.5% rental yield for good quality stock in those 3 major cities. When you look at more of the emerging markets and Bolton, Newcastle, as you mentioned, then your yields really do start to explode. And Newcastle is a great example. And I see a lot of potential in Newcastle due to everything that's happening in the football world at the moment. But from a yield perspective in Newcastle, you can achieve anywhere from about 9% to 12% in rental yield. And they're very student-centric, or Newcastle is a very student-centric city. It has a very high population in people under the age of 25 who will rent, and they come up from down south as well, where they've been paying a bit more money to live for their accommodation on their rent, and they'll come up to Newcastle and they're willing to pay a little bit more for their rent at the end of the day, which really helps landlords, especially buy-to-let investors, capitalizing on that market, get some very, very attractive rental yields in the north of England. So that's just a bit of an example, but I think Newcastle is really, I give it another 12 months and I think it'll start to solidify its position as one of the main investment cities in the UK. But I think there's a lot to look forward to with Newcastle. I think there's going to be some big things unfold in that Newcastle market over the next 12 months.
Well, give us a quick pitch. I mean, I know that if we're pressed for time, you should be getting to bed soon. I spent a lot of time in the north of England. I went to Hadrian's Wall and I went to a place called Carlisle and down to Newcastle. Newcastle was a beautiful city. I was just awestruck by a lot of the architecture, and it is on the water there. It's a beautiful place. It can be rough in some parts as well, certainly. But
exactly.
but every city has a bit of grime but that sort of brings the color.
Definitely.
What is happening over in Newcastle? What give us the top line, sort of how big's the city? What's happening over there, and what do you anticipate for that growth?
Yeah. So at the moment, Newcastle is a sub 1 million population. It sits at about 850 from the last time I checked it. So there's still a decent number of people that are living in Newcastle. I think the opportunity lies in what's just happened in the Premier League and with Newcastle Football Club. And it sounds absolutely ridiculous when you start a conversation with some people and you say, oh, but Newcastle Football Club's been taken over. They just think you're mad. But I think if we look at track record and what's happened in the past when we've seen Abu Dhabi take over Manchester City and what that did for Manchester. And it completely revitalized where Etihad Stadium is in Manchester, and just gave it a new life, essentially. And that Abu Dhabi consortium that bought Manchester City, it was about 10 years ago now, but they invested a lot of money into the city to modernize it, to bring it up to the level that they thought it should be at. And I think we're going to see a very similar thing with Newcastle, but they're going to have more control over the city, as ridiculous as that sounds as well. But they partnered with the Saudi Arabian consortium that's purchased Newcastle Football Club, has partnered with the Reuben brothers. And the Reuben brothers own about 3/4 of Newcastle as it stands. And about a week after this consortium came together and purchased the club for £330 million, they then went and committed about £250 million into a new green energy development outside of Newcastle. It's about 30 to 35 minutes outside of Newcastle, but its purpose is to provide green energy for Newcastle, the city itself. And I think that with that concept in mind and what they're thinking to do, I think there's big plans in the future for investment into the city to revitalize Newcastle, to bring it back to where it was in its heyday. And Newcastle itself is quite a modern city. It's got very good infrastructure. It's got some large corporates that have relocated up to Newcastle as well. And it's got connectivity down to London. Yes, it takes about 3.5 hours at the moment, but it's still got that means of access as well. And I think that with the help of this Saudi Arabian consortium and what it's going to do for the football club and how they're going to get more international recognition, I think we're going to start to see a lot of investment put into Newcastle over it might not be the next 12 months, but maybe the next 2 or 3 years when it starts to come into effect. But I think that there's a massive opportunity there for Newcastle. And thanks to the backing of football, the world's game. And I think it's really going to help it, put Newcastle on the map a little bit more than what it is at the moment. So we'll see. Exciting times, though. Very exciting times for Newcastle.
Man, I can hear it in your voice. So if you're going to pick one place for your next investment, where are you personally investing?
I am going, well, I find it tough to pick one at the moment. I'm a massive fan of Birmingham. I think Birmingham presents an awesome opportunity. The only thing that's stopping me with Birmingham at the moment is the fact that I want to buy, or ideally buy 1 or 2, or so 2 or 3, you could say. And from a price point perspective, it's a little bit difficult for me to do that there. But with Newcastle being the sitting level at the moment, I think from a price point perspective and affordability perspective, and the growth that we'll see in Newcastle will be sublime. Newcastle's also up there for me. So I wouldn't bag one or the other, but I'd say that, if for me personally at the moment, Newcastle suits what I'm trying to do. So Newcastle's probably at the top of that list, followed by Birmingham.
Mate, so, thank you very much for your deep and thorough analysis. For all of you out there that watch this, I hope you got some real value out of this. I'm certainly excited about jumping in and investing back in the UK and just getting over there, really.
Let's get you here.
For all of you that are interested in investing in the UK or in the European markets, do reach out to Chris. It's chris@wealthi.com.au. Make sure to watch his podcast and to leave some comments, like and subscribe to his show as well.
Okay.
And again, if you've enjoyed this show or have any comments or questions for Chris, leave them in the comments below. Subscribe. I hope you've enjoyed this episode, short and sweet. We'll catch you all later. Thank you for joining us.
Thank you, Dom. It's been great to be here.